Hello, my name is Lauren Ingram and I am the editor of Captive Review. And I'm happy to welcome you today. We're just going to wait one moment until there is more people around, and then we will start the webinar. Good morning or good afternoon, wherever you may be, and welcome to this webinar today, sponsored by the Business Development Agency Bermuda on the expansion of the Bermuda Captive. For those who don't know me, my name is Lauren Ingram. I am the editor of Captive Review, and I am very happy to be introducing this today. Before we start, just a little bit of housekeeping. I'll just let you know today we have a moderator who's going to be moderating the entire session. So we have Grainne Richmond, who is the president of BIMA and VP at Strategic Risk Solutions. We have Richard Daly, who is managing director at Strategic Risk Solutions. Kim Wiley, senior counsel at ASW Law. David Gibbons, partner of Captive Insurance at PwC. So I'd just like to welcome them all today. Hi all, thank you so much.
Hi, thank you.
So before you all get to it, I'll just let everyone listening know that you can ask everyone questions. There will be a question and answer session at the end. Please go to slido.com and put in Captive Review or scan the QR code and you can put in your questions. You can see what other people have submitted and you can vote on their questions as well. That's all from me. Please enjoy. and I'll hand over to Grainne.
Great. Thank you so much, Lauren. And thank you to Captive Review and the Bermuda Development Association for putting this panel together and for asking me to moderate as president of BIMA. I'm absolutely delighted to be joined by my panelists today as we delve into the captive landscape, and in particular the Bermuda captive landscape, and what we have seen over the last 18 to 24 months, where we see expansions and where we see opportunities. In writing this part of this introduction, I did try to come up with some different words that we're not tired of hearing over the last 12 to 18 months, from unprecedented, unparalleled, and hardening market and so forth. And to be honest, I just couldn't, so I'm not going to delve into it. We will be delving into some of these areas that have impacted globally and the captive space. But I thought it was very important to set the scene of where we are and where the captive landscape has grown maybe over the 15, 18 months globally. So Richard, I know SRS have developed some great statistics in this area, so I'd invite you to kick us off on where we are at present in the global captive space, and then give us some high points on Bermuda.
Absolutely, thank you, Grainne, and good morning, everyone, or afternoon, depending on where you're at. In terms of just overall global statistics, at the end of 2020, there were approximately 6,300 captives worldwide, and another 3,000 plus segregated cells or incorporated cells. The geographic split for captives globally, about a third are in the offshore world, so the big players being here in Bermuda, Cayman, Barbados, and then to a lesser extent BVI, Bahamas, and several other jurisdictions. A little over 50% are located in North America, primarily the US. And then the remaining 16% of global captives are Europe and Asia. We have seen a fair amount of M&A activity, and that has led to a fairly high number of deregulations or captives just being closed down, whether they be in mature domiciles where they've just run their course, or there's been a merger of two companies and they only need one captive. So the numbers were a little high on that side, but we've definitely seen a lot of activity in terms of interests in new formations. On the formation side, just in the year 2020, there were 382 new captives formed and 336 new cells. So pretty significant growth there. On a net basis, in the offshore world, we're down about 4%. The US has held its ground pretty flat there, and Europe and Asia are down about 2%. In terms of Bermuda specifically, we had 12 new licenses in 2020 and 47 deregulations, so quite a high number there. A lot of our new interest in captives here in Bermuda has come from Canada and the US. We are seeing interest out of Latin America as well, but mostly Canada and the US. Also here in Bermuda, in addition to captives, we have some 520 commercial entities. And we don't really publish our segregated account numbers, but it is significant here in Bermuda, and I'm sure we will look to do that in the future. In terms of 2021, we're off to a strong start. We've got 18 new formations in the insurance sector, of which 4 are in the captive space. So with that, I guess to kind of set the landscape in terms of the big ticket items, kind of the 5 areas of where we've seen the greatest development over the last 15 to 18 months. Clearly, COVID has had an impact on the world, on Bermuda, on how we interface with our clients. Okay. The hard market has definitely been another very significant event in our world. We see a lot of competition across domiciles, heightened regulation. We'll speak about BEPS, Solvency II, and economic substance, all very relevant and recent increases in regulation. And then the last point would be captive sophistication. captives are just getting into more non-traditional lines, areas of coverage that we just haven't seen in the past. So I think with that said, maybe David, I'll invite you in for some comments around COVID and what you're seeing on your side.
Thanks very much, Richard. Thanks, Grainne. And good day to everyone. I'll pick two of the things that you were talking about there, Richard. I'll talk about COVID and I'll talk about the hard market. I think even before COVID, due to a large number of natural disasters occurring, the reinsurance and insurance market pricing was beginning to harden. And we started getting calls from traditional and non-traditional markets about the benefits of self-insurance and seeing captives as an option. With the combination of that and COVID, it's an interesting change of dynamic over the last kind of 5 years. I would say about 4 or 5 years ago in a softer market, there were a lot of risk managers and CROs providing complex presentations to the board and C-suite, trying to get time to talk about either the formation of a captive for the first time and the benefits, or the expansion of their captive offering. And because there were other things on the agenda, the C-suite and the board of directors probably weren't listening as much as they normally would. With COVID and the hard market, the desire to save money and spend money in wise areas has shifted that dynamic the other way, where C-suite boards are now asking chief risk officers and risk managers about the use of captives and how much self-insurance they can actually put into captives. And there's an immediacy to it that we haven't seen before. Ultimately, they're looking to make the change, form the captive, or increase the number of programs for the next renewal. So stats tell a very good picture of the past, but I don't think the interest and the future where captives are going, particularly in Bermuda, it will come out in kind of even last year's stats. You'll probably see it reflected in this year's and next year's as this renewal season plays out.
That's very interesting, David, because I do agree with you. People don't just jump in and suddenly decide to form a captive. So there's a lot of decision making around the table going on right now in relation to captives that we'll probably see that come into effect towards the end of this year and into 2022. In relation to COVID, Richard, did you have anything else you needed to address in relation to COVID and how you've seen the impact?
Yeah, definitely. I would say, you know, the last 15 months clearly has been, you know, a different environment we've been operating in. If I think back when COVID first hit, the first 3 or 4 months, so March through midsummer last year, there was obviously an immediate pullback of new initiatives and captives. You know, our clients, like everyone around the world, was just trying to figure out internally how they're dealing with this new norm, so to speak. You know, captives continued to operate obviously with their existing programs, but we really saw kind of new initiatives kind of come to a standstill. We saw pressures on returning capital, excess capital out of captives back to their shareholders. And then when we got into the summer months and into the fall, people were settled in. They were figuring out the new way of doing business. Video conferencing became the new norm, as it still is today. And kind of unexpectedly, from a Bermuda point of view, we got closer to our clients. Everybody's working from home, easier to have meetings, video calls. And so we were in front of our clients on a weekly basis. We were having the regulator on the line, in some instances, the registrar of companies, very accessible during this period of time. So it was quite surprising in that respect. And then as we headed into the fall, through the winter, and then on into this year, the hard market obviously continued, and the level of interest that we've seen in captives just generally has been, you know, the most I've seen in my 20 years of doing this.
Yeah,
I would chime in there as well. And good morning, everybody. And it's great to be on this panel. But it's interesting listening to those statistics because they really don't reflect what we've been seeing in the market. And I think that goes to what David is saying, that there is going to be a lag of 12 to 18 months before we see this reflected in the statistics. Because we've certainly been getting calls on a regular basis, almost daily, about new captive structures. Interestingly, we're seeing a lot of captives come out of Canada. And primarily in the cannabis space, because I mean, the hard market is a non-existent market for certain insurance products for this emerging industry, and so we're seeing a lot of interest in setting up captives specifically for D&O type of coverage, but looking at expanding into different lines as well. So I think that we will see those statistics look very different in a short period of time.
Yeah, thanks, Kim. I do agree with everybody there in the hardening market and then the no market for certain people. I know in my space in the hardening market, the renewals that are coming up July 1 are just not pretty, but it's great to see the captive being able to be used a bit more into that. Kim, did you want to address what for me, you're on the front line on some of these new formations in that you are the one that is normally finalizing these business plans that are being put in front of the regulator. And I know we will discuss the interaction with the regulator later on, especially how they have pivoted as well during the COVID-19. But what are you seeing? Obviously, I'm a child. I giggle every time I hear the word cannabis in the new business. But what else are you seeing that you're putting in front of the Bermuda regulator for approval?
Certainly. We are seeing a lot of interest in the captive structure from Canada. And the Canadian market is a market that we've been working with for the last several years in terms of kind of meeting with Canadian risk managers and service providers, introducing them to the captive product. And we've seen interest over the years, but it really seems to have got traction very recently. And I expect that's for a number of reasons, obviously the market being one, and then the new industry of cannabis, which requires some type of insurance product, and self-insurance makes a lot of sense, particularly around D&O coverage. So I would say of particularly of the entities that we worked with this year, a large number of those have come from the Canadian market, and that's not just limited to cannabis either. We've seen various industries looking at a captive solution, including transportation. Another area that we have seen as well is an interest in climate change or climate captives. And we've seen a bit more out of the US than Canada, but we've seen certain types of structures that look at particular climate risk or certain climate products using a Bermuda insurance vehicle to manage that risk. So a number of different areas. And then we're also seeing our clients look at using some of their existing captives and expand into other product lines. In particular, we've seen our cannabis entities that have captives that were initially set up for D&O coverage, looking at expanding that coverage to cover specific risks related to the properties that they hold and also related to the products that they sell.
You've mentioned two things there that I know Richard and David also want to touch on are the kind of what I would call the new entrants and then those new lines of business such as D&O. David, did you want to address what you're seeing in the new entrants? I'm certainly seeing a kind of a different, I would call it a different type of stakeholder in this space, but I know you've seen a lot of that as well.
Yeah, so expanding on what Kim was saying, I mean, I think Canada is a massive growth area, and kind of the reasons why, beyond kind of bespoke cover that can't get anywhere else like D&O cover for cannabis companies, is the Canadian market probably underutilized reinsurance in the past. And obviously a very traditional use of a captive is to access the reinsurance market, which makes Bermuda obviously very appealing because of the suite of reinsurers they have, plus a new class of 2020, which expands that group even further. The other piece, though, as you look at those new entrants, it is truly people that are companies that haven't looked at self-insurance in detail. And really, it requires a certain level of education from everyone in the market to get them up to speed about what they're getting into with a captive. And the benefits beyond just writing cover, I think many people, as the risk management suite of things, understand kind of self-insurance, understand that you have to have capital to cover the risk. But especially if you're early on in your journey, you forget the additional benefits of risk mitigation. Once those risks are clearly identified within your company structure on your balance sheets in an entity, programs start to become apparent in how you reduce that risk. And there's actually the additional savings. And that's one of the things with these new entrants, as you go through that journey of education, understanding, that is really seen as valuable. And back to Richard's point earlier, the fact that there is this concentration of intellectual capital in Bermuda that you can now get on a video conference with and talk through this process in a very short period of time really assists the Bermudian model, especially as people want to get to market quicker and want to get that education as quickly as possible.
Yeah. You mentioned, David, new entrants. Obviously, some will not want to jump straight into a new captive straight away. Richard, I know we discussed what you're seeing, you know, the lines of D&O also, but also the expansion of the use of cell captives in the Bermuda marketplace.
Yeah, the the speed to market, we can't stress that enough. People, they first, on the education piece, as David mentioned, they understand broadly the concept. They think and know they want it, and how quickly can I get it? And particularly around D&O, which we're seeing, again, a lot of activity, the separation of ownership of a captive entity and the insured is key to that type of coverage. So a segregated account or an incorporated cell, or I should say just a segregated account, makes perfect sense for that line of cover. We've spent an awful lot of time just educating folks that are looking to set up. It's a long-term game getting into the captive world, so it's not just, you know, a year one solution, get in, get out type of thing.
Kim, we're talking about cells, and I know at ASW, the incorporated cell legislation came into effect over 18 months ago, would I be correct? But we're now seeing some traction in that space here in Bermuda. Did you want to address just that briefly?
Yes, absolutely. And so you're correct. We do have incorporated segregated account legislation that came into effect fairly recently, and we're starting to see some interest from the captive sector in using this structure. And as I'm sure people are aware, Bermuda's had segregated account legislation that's tried and tested and has been in place for over 20 years now, that is very useful, particularly around speed to market and getting a captive program set up in a way where assets and liabilities are statutorily protected. But there's interest from industry and from the market to go one step further and have an incorporated process where you actually have a separate legal entity set up as a segregated account. And that's what this legislation does. It allows for almost a parent-subsidiary relationship, but it can be used in the captive model. So you end up having a license at what is the ISAC or the parent level, and you can have licenses at the various different incorporated segregated account level as well. It provides an additional level of comfort in terms of protection of assets. And it has some additional features as well, in that it allows for you to very easily parse off business. And we were talking a bit about the M&A activity in the sector, and an ISAC structure allows for that, and with greater ease than you would find in a segregated account structure. We are seeing a lot of interest, and it's certainly a model that we are discussing with our existing captive clients who are looking at conversion into some type of segregated structure. We have set up one ISAC structure, which I believe is the first ISAC structure that's been used for a captive model. So we have set that up recently, actually, for a Canadian entity to use. So it is being tested in Bermuda, and we think it'll hold up very well.
Yeah. Sorry, Richard, go ahead.
Yeah, no, Kim, I was just going to chime in there and just ask if you're seeing much interest in the ISAC from U.S. clients, because I know tax residency in the U.S., whether they take a 953D, I would think that process is a little easier if you're your own incorporated cell versus a segregated account.
Exactly. And that's the area previously where we've spent a bit more time on the phone with clients, is getting them comfortable around what it actually means to have a segregated account. And although assets and liabilities are protected, it isn't a separate legal entity. When they enter into contracts, it's the general account doing so. And so this is a way of clearly showing that you are a separate legal entity. It's a separate board of directors. It's a separate name. It's a separate registration. So there are advantages, and we are starting to see some of those advantages. And it'll be interesting, I think, to see when people are looking at setting up some type of segregated structure, if there's a gravitation towards the ISAC model as opposed to the segregated account model.
Okay, it's quite clear that there is a lot going on in the space, and I can feel the uptick already in 2021. Before we move on to one of the key institutions that's important when we're trying to grow all this business, is there anything any of the panelists want to address in what they're seeing? Did anybody want to address cryptocurrency and what we're seeing in the captive space there? Radio silence. Yeah, I know last year I had the pleasure of having one of the first captives that was set up here to insure a cryptocurrency company on my panel for the Bermuda Captive conference. And one of the messages he said, and I think it still holds true today, was they were delighted to see the innovation by the Bermuda Monetary Authority in their space, but overall as they move forward. And he mentioned that last September, and I'm certainly seeing some of that innovation continue through today as we stand. I'd be interesting to hear from the panelists, and in particular, Kim, because you are the one that is doing a lot of that one-on-one discussions with the Bermuda regulator. How have you found the regulator as we go through, the years that we've been through, and also bringing kind of a new product and a potential kind of new way of thinking on some of these captives to the table?
Yeah, it's interesting, and I think COVID has come at a time where the regulator is sort of moving up in level of sophistication and in terms of their processes and procedures. And so the two have kind of come together actually quite nicely, because what we saw at the start of the pandemic is obviously a very quick shift to a remote working environment. And at a time when the BMA was actually looking to centralize all applications through a particular email portal. And so now when we actually submit applications, rather than obviously hard copies or emailing specific persons or departments, we send through a centralized email system. And that's been very good. And we found the responsiveness has actually been better. In terms of the files being picked up, and also the continuity at the BMA. So we found that the system formalizing has actually been really positive for getting applications through very quickly. And we've also found that actually connecting with the BMA ahead of putting in an application it's always been actually a big selling feature for the jurisdiction, that you're able to get right in front of the regulator and get that level of access and discuss your program. But even more so now, given that it's easier to get everybody on a call than it is to get them physically in one room. And so we are seeing very good feedback on applications prior to submission, which has been really helpful. And overall, I think the BMA has done a wonderful job adapting to the new environment and being accessible to registrants.
Yeah. Sorry, David, go ahead.
Yeah, so just adding on to that, I think that the one thing that sets the BMA apart from other kind of very well recognized global regulators is their accessibility and availability. Their willingness to invest the time and sit down now over video conference, as Richard said early, and talk through the issues companies are dealing with or their thoughts as they look to either form a captive or they look to kind of reconstitute what their captive is doing. It is interesting, though, with global regulation, what we're seeing more and more with our clients is that the BMA's mandates aren't often the limiting factor the captives are managing towards. So when you look at the BMA solvency, that's a good measure, and all of our captives are in compliance with it. But in many cases now, entities overall have their own solvency requirements for their subsidiaries, which are in excess of what the BMA needs. Another thing is when you look at board meetings, there's obviously a certain amount of substance requirement on the island through the BMA legislation, but there's economic substance legislation that requires that as well, and global tax regulation that requires it on top. So it is really interesting as you move from having to deal with both a local regulator as well as global regulations and how they kind of fit together.
If I could maybe just add on the back of that as well regarding economic substance, you know, from an insurance management company point of view, we've spent a lot of time working with our boards on the educational side of this legislation. It came into place in mid-19 for filings. First set of filings took place last June around economic substance, and it's really, you know, where is your captive tax resident? Is it tax resident in the States or Canada? If that's the case, then, you know, your economic substance requirements here are far less. If it's not, then you really have to pay attention to the core income generating activities around insurance and how these captives operate. So we've had a lot of discussion with our clients around blowing out the board a bit in terms of independent directors, resident directors here in Bermuda. Operational committees has been another area where we've really expanded in some cases how our captives approach renewals, and these committees are getting together. They're directing the actuaries on the pricing side and on the reserving side, agreeing the terms and conditions, and real substance to these meetings, and making these recommendations to the board for board level approval. So while its economic substance in some respects has been kind of a bolt on to other legislation that's been in place around the head office requirement, it is siphoned off and regulated by the Registrar of Companies, which is different than the Bermuda Monetary Authority. So there are differences in it. And I can say from our board's point of view, the ones we've been working with, they want to obviously do the right thing with respect to regulation. They're here in Bermuda because we are highly regulated. And picking up on David's point around the physical or the electronic meetings with the regulator, they've been very accessible over the last 12 months. Clients really appreciate a face-to-face with the regulator and are quite impressed, quite frankly, as to how quickly we've been able to pull meetings together for them to explain what they're looking to do and to get that immediate feedback. So I think it's been just a tremendous plus for how we've set up new entities, not having to photocopy 5 packages of the insurance application, which weighs about 2 pounds, and running it down the street to the BMA, a definite plus.
Yeah, I agree. It's quite funny. People that have been to Hamilton, Bermuda, it's we like to think of ourselves as quite cosmopolitan, but you know, we're 1 or 2 blocks away from each other's offices. But the thought of just doing these virtual meetings with the Bermuda regulator has certainly sped up the process, in my opinion, on getting some of this stuff to market. So it has been a positive. I'm just going to remind our people who are listening that to submit any questions, you do need to go to slido.com and do #CaptiveReview for any questions you have for our panelists. We will be opening up to questions in about 5 or 10 minutes. We've discussed a lot. We've discussed the current state of the captive space globally and here in Bermuda. We've discussed potential new entrants and different stakeholders. The important role the regulator plays, and it is an important role. They have to work with industry, but also maintain their high reputation and protect our policyholders and stakeholders. There is a lot of development in the space over the last 18 months with code of conducts, ensuring that us all working in this space are adhering to proper standards. And one thing that's significantly important, especially as we're all, you know, working virtually and working from home, is cyber. And I think the BMA are leading the way on this in ensuring that we as a jurisdiction, that we hold ourselves accountable on our cyber security and cyber procedures. And I'd like to open it up to the panelists on how they see the cyber impact on the Bermuda Captive space and the code of conduct.
So Grainne, it's interesting, right? Because the last review, if we go back a few years, in 2018, the BMA was looking at this, and they were looking at it for good reason. If you think about what someone looking to cyber attack a company would be looking for, insurance companies have that. One is they make large payments. And if you're able to create a fictitious body, you can have a claim payment redirected to you and make a one-off large sum of money. Two, insurance companies have a lot of personal data, and personal data is valuable on the dark web, and it is something that you can sell. The BMA recognizes that, the insurance industry recognizes it. And from 2018, when the BMA did their review, they recognized the fact that all elements of the insurance industry in Bermuda were increasing their resilience in this. And that has grown over the last 3 years. What does that mean? Well, it means things like a cyber policy and security code is being tabled at the board level and discussed just like an investment policy or an underwriting policy would. It means that your third-party providers, which captives often use, you're looking at their cyber security and evaluating that to ensure that when you hand off information that it's protected. And that list of things form the basis of what the BMA now requires around the kind of cyber code of conduct. And I know, Kim, you've done a lot of work with this as well, so maybe you can kind of go into just a little bit more detail there, but I wanted to kind of set the scene for where this comes from.
Yeah, that's really helpful. And in terms of the cyber code and how it applies to all insurers and intermediaries in Bermuda. So that covers all captives. And like the other codes that are in effect, they're not a one-size-fits-all. So they're very dependent on the sort of nature and scale of the operations. And the code came into effect earlier this year, and companies have until the end of 2021 to ensure that they're in compliance. But as David was saying, the sort of key point is that the board has oversight of cyber risk within the captive organization. The entity does need to adopt a cyber policy, and that's certainly something that we've been helping guide clients with. And that's not just a sort of standard form. It really requires looking at the specific risks of your operation and building that into a policy and doing a risk assessment of the business. And then, other provisions around ensuring adequate training and ensuring adequate review that the policy is properly rolled out. So that's something that certainly should be on the radar for captives over the next year. And this is an area where we certainly don't see it as unnecessarily or overburdensome regulation. This is a real risk. It's not unique to the captive space. It's something all organizations are facing, and certainly heightened with remote working. We've recently seen Colonial Oil suffer a ransomware attack in the US that shut down the oil supply for most of the East Coast. And so these are real threats. We've been working with a number of clients who've been the subject of ransomware attacks and working through the requirements in Bermuda when something like that does happen. So things like the cyber policy really help try and mitigate against some of these risks. Another point I just like to raise is the recent amendments to the Insurance Act, which include cyber reporting events and apply to all insurers, including captives. And so if there is a cyber event that has an adverse impact or could have an adverse impact on policyholders, there is an obligation to report that immediately to the Bermuda Monetary Authority. And then within 14 days, the entity needs to provide some more detail showing how the risks have been addressed. So I think that these are obviously kind of policies that have an impact on captives, but they're there to prevent these terrible type of occurrences happening in the first place. So I think they're a really good example of how the regulator is recognizing the very real business risks and getting out in front of those.
Yeah, I felt it was important to bring it up because to me it's not a barrier. It is very much a comfort for those who want to do business with the jurisdiction that we are treating this seriously across the board. Before we open up to questions, overall, I work in the captive space, as all of you do, and I have a very positive outlook of how the Bermuda captive space will be over the next 18 to 24 months. I'm hoping you all agree, but was there anything that you believe our listeners should be aware of or would be of interest, or some key items that would be coming up in the next 12 to 18 months in the Bermuda captive space?
I think from my perspective, Grainne, I'm equally positive. I heard Richard's stats earlier, and I'm also a human capital leader for PwC for my sins. And I have a good idea of where the market's going. And it seems that everyone in the captive market is gearing up for a 5 to 10% personnel increase because they expect the volume of business to grow. And I think that that's really indicative of where Bermuda thinks captives are going. Captives are either going to get bigger for existing captives or there are going to be more of them. And we need to have the intellectual capital in place beforehand to be able to meet that need. So based on that alone, just seeing where everyone is doing and mergers happening to gear up for the size and scale of this, I am very positive on the future, particularly for Bermuda, because the need for reinsurance still, even in the hardening market, somewhere in that stack is there. And Bermuda is the third largest reinsurance provider in the world, is obviously a key captive domicile of choice.
Yeah, I would echo that. That I think that the Bermuda is very well placed, and I do think we will continue to see an expansion of captives. Like I said in the beginning, we're getting calls almost daily asking about the captive model or looking at expanding a particular captive. And I think there's a lot of indicators in the cannabis space in particular. And it's a really untapped market in terms of the need for insurance and insurance products, and particularly if we get access to the U.S. market, that just makes the interest exponential.
Yeah, your point around the M&A activity in the service provider space here in Bermuda. I mean, we're no different to what's happening globally with respect to M&A, and there has been somewhat of a shrinkage in the amount of service providers that are here. I think, the skill set that we have and the investment that's being made in people and in technology very well positions us going forward and how we're going to service our clients. So I think it's, it really is exciting times. We are a mature domicile. We have a very experienced workforce that work in this industry. We do need to be mindful, though, of bringing in new blood into our industry because they're going to be the future of it as people move out into their retirement years.
Great. I'm just going to thank you everyone for that. I'm just waiting for Captive Review to see if they want to share the questions from our listeners. Whilst I have this opportunity, I did want to point out that the Bermuda Captive Conference is going to be virtual again this year from June 14th to 15th. You will hear from additional panelists who will be delving in a bit deeper into what all my panelists here have discussed. That is, the impact of COVID-19 the hardening market, some developments to look out for in the commercial space and going forward. So now we have our questions up. Other than cannabis, I think we've addressed actually some of this. Other than cannabis, what are some of the emerging industries looking to captives as a solution? I think we've addressed that, unless anybody on the panelists wants to highlight any other areas. No? Okay. Sorry,
Grainne, I have a question about cyber as well.
Sure.
And the question specifically, what are some of the newer cyber policies that captives are writing, giving the increased awareness of cyber risk assessments? And there, I would say, and maybe, I don't know if Richard or David could speak to specific actual details of cyber policies, but one point that I would note is the BMA has provided some guidance around cyber underwriting, and we expect there to be more specific guidance coming up in the future, but essentially asking all insurers to look at the policies they're writing and to look at the specific clauses of those policies to determine whether or not there are any specific cyber exclusions. And if so, to do, if there is cyber included in the policies, for insurers to look very carefully at their modeling, recognizing that we don't have a lot of reliable historical modeling of cyber risk. So this is an area of potential exposure. So I would say just to kind of be aware that there will be further guidance coming out from the BMA specifically around cyber underwriting and how that could apply to captives.
Yeah, from my perspective, I'm not seeing a whole lot of cyber being written as standalone policies in captives, because if you think of kind of the typical cyber risk, it's high severity, low frequency, and that is typically not something you would put in your captive, because a potential drain on capital to self-insure that doesn't make sense. There are policies around business interruption and recovery from cyber attacks, which are easier to quantify in terms of the hiring of professionals to deal with that and the cost of those. But at the moment, I'm not seeing a whole lot of major cyber policies being written in captives.
Okay. Thanks, everyone. Sorry, Richard.
Yeah, no, I was just going to agree with that, what David said as well. It's exactly what we're seeing.
Okay. A question came up on Asia Pacific. Is anyone seeing further growth? I know the BDA did some roadshows about over the last few years to Asia Pacific. Are we seeing any interest in these coming to Bermuda, or is this just still a targeted area for future growth?
It is an area that we're not getting as many inquiries. We'd certainly like more. We think it is a huge growth potential area, and the captive model will fit very well into specific businesses in the Asian market. And there really isn't a captive solution in the area in Asia that has the kind of quality of service as Bermuda. And I think of it a bit, like the process that we've gone through over the last few years with the Canadian market, where it's a long process of getting in front of the right people, in front of risk managers, explaining the Bermuda product and getting some traction. So it's an area that we hope to have more traction in the coming years. But we do see an interest. Definitely, there's an interest.
Okay. We've had a question come up. Sorry, Richard.
No, I was just going to jump ahead. There's one question that's named to me. I think what this is relating to is when we were talking about the incorporated cell legislation that's new in place. So I know, Kim, you're on the forefront of some of those formations. I would assume that entering into that structure versus a segregated account structure would bring some additional costs. You obviously can leverage the the single entity, in terms of audit and other services that it would require, but there would be presumably a splitting out of maybe additional boards of directors at the cell level, standalone audits, etc. So I think we would expect a modest increase in the costs at the cell level. Would that be a fair statement?
Yeah, that's certainly fair, given that you have two entities to incorporate and administer. There are, however, some considerable synergies. Often you have an overlap in the board. There's reduced fees when you actually go through the registrar of companies process, and certainly with service providers. And also at the time that you do your application to set up your ISAC and your individual ISAs as part of the process, you're able to apply for a fee reduction with the BMA, which certainly brings down the cost considerably. So there is a slight increase to a segregated account structure. A segregated account structure has an ease of access, a responsive quickness to it that the ISAC has just doesn't have in terms of getting an entity and a program in place very quickly. But it does have the benefits, the ISAC structure does have the benefits of the separate legal the legal person and you know the additional advantages that come along with that. So it does require some planning at the outset, and we certainly work with our clients, and we have sort of a comparison table, and we walk through the pros and cons of each. But I think the point to take away is that there are a variety of structures in Bermuda that could fit with what you're trying to do, and it's about having those options and seeing how that kind of accords with what your business objectives are.
Right. Thanks. There's also a question on D&O. Are we seeing this interest primarily from Europe or from other jurisdictions?
From our point of view, we've said it throughout Canada, particularly in the cannabis sector, is probably the leader in interest. The US, Europe, we're not seeing so much out of Europe at this point.
Yeah. And we're going to close with one last question, and I will leave it open to anybody. The press like to grab headlines, make a big deal when we hear about firms or captives, I suppose, what they're trying to get to, moving onshore or re-domiciling. Do the panelists feel this is a trend or just media hype?
I think from my perspective that companies make standalone decisions based on their facts and circumstances. And in most instances, people have chosen Bermuda effectively for the intellectual capital and access to the reinsurance market. So when I look at my client base, I haven't seen a lot of onshoring because they have to visit Bermuda anyway to get those two things. And it doesn't make sense to move their captive back. Does that mean there hasn't been onshoring? Absolutely. But without getting into specific client circumstances, I don't see a trend. But that's just me.
Yeah, I would agree. I think in the last, I have to go back probably about 3 years before I see a circumstance where we've had a captive that's moved to a so-called onshore jurisdiction. And I would completely agree, David. I think when the decision is made to set up a captive, it's not as if, you spin a globe and you kind of find Bermuda. And there's a lot of thought that goes into why Bermuda as a jurisdiction. And there's a lot of compelling reasons to be in Bermuda. And it's not just a matter of there not being an alternative in an onshore jurisdiction. And all of those reasons to be in Bermuda continue to hold true. There's been onshore managers almost the length of time that there has been captives, and clients continue to choose Bermuda, and we expect that they will continue to do so.
Yeah, and a very high percentage of captives, particularly out of the US, they elect to be US tax-paying entities anyway, which makes a lot of that tax argument go away. So they look to Bermuda for all the reasons that you both have mentioned.
Yeah, I agree with all of that, and I think it's I think when people are pulling headlines, or even looking at statistics, you need to make sure that you delve into the story a bit further, and also on statistics, I would caution people to make sure that it's comparing apples to apples. Certain jurisdictions do record different numbers, but I like what David and the panelists said, that really I think the strength of the Bermuda market is really seen in the premium volumes that we're seeing coming through, the new licenses in 2021, and that the majority of the service providers here are seeing an uptick in hiring personnel. And to me, that shows you've got the business there, you need personnel to service it, and that is a huge indicator for me. Before we close off, I wanted to ask, is there any last message from any of the panelists before we get to the close off stages?
Well, my message is that I hope to see everybody in person, not at the Captive Conference this year, but at the one the following year. I do hope that we get a chance to regroup in Bermuda, because I think it's a wonderful opportunity to see everybody in person and to talk about this industry.
I would absolutely echo that. I mean, one of the biggest selling points of Bermuda is physically coming here and experience and what Bermuda can provide to your company. And the fact that we're seeing so much business in an environment where people can't travel here is really encouraging for when this ultimately opens up and we do get to actually host people locally.
Yeah, I would agree. It's very exciting right now, the level of activity that's going on. So the sooner we can get our clients back on the island and start to do business the old normal way, the better.
Yeah. Great. Thank you, everyone. There was one last question on our thoughts of competition from other jurisdictions. There's always going to be competition from other jurisdictions, but I think we've shown from our 45 to 50-minute discussion that Bermuda is more than capable to handle it and remain as the leading captive jurisdiction. It leaves it with me to thank my panelists, David, Richard, and Kim. Thank you for your time today and for discussing all the points. And once again, thank you to Captive Review and for the Bermuda Development Association for putting this together. And last but not least, thank you to everyone who dialed in, called in, video linked in to the presentation. We very much appreciate your attendance and your interest in the Bermuda Captive domicile. So with that, I hope to see some of you virtually June 14th, 15th at the Bermuda Captive Conference. And as I said, after that, hopefully to see you all on island. Take care, everyone. Thank you.
Have a great day.
Thank you.
Bye.
Bye-bye.